I'm Alan Kinney, Editorial Director with REIT.com, and we're at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for All Things REIT. I'm joined by Sherry Rexroad, Chief Investment Officer with BlackRock Global Real Estate Securities. Sherry, big story right now in the global economy is the decelerating growth in China. How is that impacting investors' appetite for risk right now?
I think the global markets are really trying to come to a new equilibrium, one that's not as dependent upon the Fed or supercharged growth out of China. So the Chinese supercycle, I think, has come to an end. I don't think it's going to be a hard landing. I think that the consumer will continue to drive the economy, as well as I think the policymakers are committed to reform, and they have the power to do so. So my belief there is that the Chinese economy is going to slow, but it's not going to be a hard landing. Given that, what we saw in August and into September was a risk-off trade, and investors went to a flight to safety. A number of those markets that were hardest hit, both across equity and debt markets, have recovered into October. And so I think, again, there's the world economy is trying to come to terms with a new equilibrium. That said, I do think that you're seeing a flight to safety and that is increasing investment out of China. So whereas the Chinese slowing economy is a negative impact to the rest of the world, I believe the Chinese investment cross-border is up 70% year over year. And so that is helping to support asset prices across the globe.
And overall, do you see foreign capital flows staying healthy in 2016?
I do. I mean, I think that right now we're at record highs. Absolute record highs, higher than we were at any point in the previous cycles. So will that continue? I don't know that it would maintain at record highs, but I certainly think high levels of cross-investment. And in fact, I think that the largest net buyers in U.S. assets were foreign investors in the last year.
And for those investors who are looking for those risk-off trades, what geographic regions right now offer the most stability?
Well, clearly the U.S. and the U.K. are identified as the most stable economies. They're also facing monetary tightening. So if you want to use the baseball analogy that everybody loves, I would look at the UK and the US as in, say, the fifth inning. Certain Asian markets like Singapore and Hong Kong are, approaching the ninth inning. Europe is, say, at the very beginning of the game. So I do see a lot of money flowing into the US and into the UK. But as a securities investor, what I can do is really look for mispricing in any of the markets, whether it's good fundamentals with a tightening monetary policy or weaker fundamentals with a monetary easing. I can often play both sides in order to find mispricing and the best relative value for my clients.
Sherry, thank you so much for your time.
Okay, thank you.
Be sure to visit REIT.com for more from REITWorld 2015.